Hi all. Today I would like to discuss about the topic exempted capital gains or deduction from capital gains in income tax under section 54. As per section 54, there are various deductions eligible from short-term capital gains and also long-term capital gains. So let's begin. The Income Tax Act grants total or partial exemption of capital gains under these following sections. So keep an eye on. Section 54, we are going to discuss about exemption from capital gains on the sale of residential house property. Section 54B, exemption from capital gains on transfer of agricultural land. Section 54D, on compulsory acquisition of industrial land and building. Section 54EC, on transfer of any long-term capital asset by acquiring certain bonds. Section 54EE, investment of specified asset. Section 54F, on transfer of any long-term capital asset other than a residential house property. Section 54G, on transfer of capital asset for shifting of industrial undertaking from urban area to any other area. Section 54GA, on transfer of capital asset for shifting industrial undertaking from any area to special economic zone (SEZ). And last section is section 54GB. It's a new section. In this we are going to discuss about deduction from capital gain on transfer of residential property for the investment in eligible company. The first one is section 54, capital gain arising from the sale of residential house property. Is the exemption from capital gains. This is arising from the sale of residential house property. And it is applicable to individual or HUF and the asset which is eligible for exemption. This asset is such property used as a residential house, and the condition for exemption is the income of such a house property is chargeable under the head income from house property, and house property had been held by the assessee for a period exceeding 24 months, means long term. The assessee should hold the house property for the period exceeding 24 months, and the asset the assessee should acquire to get the benefit or new asset, that is purchase or construction of new residential house, and the limit for acquiring the asset. The assessee has purchased a new residential house within a period of 1 year before or 2 years after the date of transfer, or constructed a residential house within a period of 3 years after the date of transfer. And the treatment of unutilized amount. The unutilized amount should be treated as deposit in capital gain account scheme. And the sale of new asset. If the new house purchased or constructed is transferred within a period of 3 years of its purchase or construction, the exemption given will be withdrawn. And the exemption given will be withdrawn, and the old exempted capital gains and the new capital gains arising on the transfer of the new house shall be treated as short-term capital gain and also chargeable to tax as the income of the previous year. The next section is section 54B, exemption from capital gains arising from the transfer of agricultural land, and it is applicable to an individual or an HUF, an asset which is eligible for exemption such as it is agricultural land situated in urban area. And the conditions for exemption is the agricultural land used by the assessee or his parents for agricultural purpose in the 2 years immediately preceding the date of transfer. And the asset the assessee should acquire to get the benefit or new asset is purchase of new agricultural land. And the time limit for acquiring the new asset is 2 years. Means the assessee has purchased within a period of 2 years from the date of transfer any other land for agricultural purpose. And the treatment of unutilized amount is treated as deposit in capital gains account scheme. And the sale of new asset is same as under section 54. That means if the new agricultural land purchased is transferred within a period of 3 years of its purchase, or the exemption that given will be withdrawn. The old exempted capital gains and new capital gain arising on the transfer of the New agricultural land shall be treated as short-term capital gain and is also chargeable to tax as the income of the previous year. And the next section is section 54D. Here we are going to discuss about exemptions from capital gains on compulsory acquisition of industrial land and building. And it is applicable to any assessee. Any assessee means he may be an individual, HUF, company, firm. The asset and conditions which is eligible for exemption. So it is any land and building in short-term or long-term used in industrial undertaking which is compulsory acquired by government under any law. And the condition is the land and building should be used by the assessee for the purpose of an individual undertaking for at least 2 years immediately preceding the date of such transfer. And the assessee should acquire to get the benefit of exemption or new asset is purchase of land or building for industrial purpose. And the time limit for acquiring the new asset is 3 years. Means the assessee has within a period of 3 years from the date of transfer purchases any other land or building for the purpose of shifting, re-establishing the industrial undertaking or setting up another industrial undertaking in that building. And the treatment of unutilized amount deposit in capital gain account scheme is same as above sections. And the sale of new asset. If the new asset is transferred within a period of 3 years of its purchase, the exemption given earlier will be withdrawn and chargeable to tax as the income of the previous year. And the next section is section 54EC. The exemption from capital gains arising from the transfer of any long-term capital asset by acquiring certain bonds. And it is applicable to any asset. Means he may be an individual, HUF, a company, or a firm. And the asset and condition which is eligible for exemption. Any long-term capital asset is eligible for exemption. And the asset the assessee should acquire to get the benefit of exemption or new asset. Means purchase of long-term specified asset issued by bonds of NHA, bonds of National Highway Authority of India, or Rural Electrification Corporation Limited. Also purchase of long-term specified asset issued by Power Finance Corporation Limited or PFC, then Indian Railway Finance Corporation. And the maximum limit of benefit is rupees 50 lakh. And the time limit for acquiring the asset is the new asset should be purchased within 6 months from the date of transfer of original asset. Then the treatment of unutilized amount is same as section 54, 54B and 54D, means deposit in capital gain account scheme. Then the sale of new asset, like if sold within 3 years, exempted capital gain will be deemed to be income from a long-term capital gain of the assessee in the years of transfer of the new asset. The next section is section 54EE. Exemption from capital gains arising from transfer of a long-term capital asset invested for startups. Is same as the section 54EC. The provision of this section are same as discussed in section 54EC, except the asset in which long-term capital gain invested. A unit or units issued before 1st April 2019 notified by the central government in his behalf. Then section 54F. Here we are going to discuss about the exempted capital gains arising from the transfer of any long-term capital asset other than a residential house property. And it is applicable to individual or Hindu undivided family. Then asset and condition which is eligible for exemption. This asset and condition is transferred a long-term capital asset other than a residential house. The assessee does not own more than one residential house on the date of transfer of original asset other than as mentioned in next. Then the asset the assessee should acquire to get the benefit is purchase or construction of a new residential house. Then the time limit for acquiring the new asset is same as section 54, means within 1 year before or 2 years after transfer in case of purchase or 3 years after transfer in case of construction. Then treatment of unutilized amount same as above, means deposit in capital gain account scheme. Then sale of new asset treated as same as for section 54, 54B, 54D, except that under section 54F. In 54F it will be taxed as long-term capital gain. Next section is section 54G, exemption from capital gains on transfer of asset in case of shifting of industrial undertaking from urban area to non-urban area, and it is applicable to any assets, means individual HUF, company or a firm, and the asset and condition which is eligible for exemption or deduction. Here transfer of long-term or short-term capital asset, and the condition is land and building, plant or machinery used for the purpose of the business of industrial undertaking situated in urban area, and the asset the assessee should acquire to get the benefit or new asset, purchase of land and building, plant or machinery in order to shift an undertaking in rural area, and the time limit for acquiring the new asset within 1 year before or within 3 years after transfer. Treatment of unutilized amount is same as above, means deposit in capital gain account scheme, and sale of new asset same as for section 54, 54B and 54D, means if the new asset is transferred within a period of 3 years of its purchase, the exemption given earlier will be withdrawn and chargeable to tax as income of previous year. And the next section is section 54GA, exemption from capital gain on transfer of capital asset for shifting industrial undertaking from any urban area to special economic zone cells. It is same as section 54G. The provision of this section are same as for provision of section 54G. The only difference is this exemption is available whereas asset is shifted from urban area to any special economic zone. In section 54G is from urban area to non-urban area. When it comes to section 54GA, the asset is shifted from urban area to any special economic zone. And the next section is section 54GB. Here we are going to discuss about exemption from capital gains on transfer of residential property for the investment in eligible company, means to finance their small or medium enterprise, and is applicable to individual or HUF, and asset and condition which is eligible for exemption, transfer of long-term residential property, that may be a house, or a plot of land, and the asset the assessee should acquire to get the benefit of exemption or new asset is equity shares in an eligible company, and the time limit for acquiring the asset before the due date of furnishing of return, and the treatment of unutilized amount treated as deposit in specified bank account. From all the above situation, the unutilized amount that we deposit in capital gain account scheme, but as per section 54GB, the unutilized amount deposits in specified bank account. Also, it's a new section. Then sale of new asset. If equity shares sold within 5 years from the date of acquisition, the exempted capital gain shall be accessible to tax in the previous year. And here is a important note to focus. Under all the above section, amount deposited in capital gains account scheme, if the amount is not utilized within the prescribed time, it will be taxed in the previous year in which the prescribed period expires. This is an additional condition for section 54F. As per section 54F, we discussed that exempted capital gains arising from the transfer of any long-term capital asset other than residential house property. There is an additional condition for section 54F. What is that? That is, if the assessee should not own more than one residential house on the date of transfer of original asset and should not purchase any residential house within prescribed time, then it is considered as new asset. So I hope you all get it clearly. And I am Mainun, final year Mcom student in MES Asmabi College, Kodungalur. And more videos are on the way. Just wait for it. Okay. Thank you.